Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. In the US, non-farm payrolls rose by 130,000 in January, well above the market expectations of 70,000, while the unemployment rate edged down to 4.3%. Overnight, Wall Street was subdued. The Dow slipped 0.13%, snapping a three-day winning streak. The Nasdaq declined 0.16%, and the S&P 500 finished almost flat. In Asia, markets were firmer. Japan's Nikkei gained 0.48%, crossing the 58,000 mark for the first time, while the Topix advanced 0.85%. Australia's ASX 200 was up 0.6% in early trade. In India, Nifty closed at 25,954 yesterday, up 19 points, whereas Bank Nifty ended at 60,745, up 119 points. Nifty is facing stiff resistance near the 26,000 mark, struggling to clear this key psychological level. This zone also coincides with the highest call writing base for weekly and monthly expiry, along with the 61.8% Fibonacci retracement near 26,027. The index formed a small bearish candle with shadows on both sides, reflecting hesitation at higher levels. For today, the 26,000 to 26,030 band remains an immediate resistance, followed by a potential upside towards 26,200 on a breakout. On the downside, the previous session's low of 25,800 and 25,700 zones are expected to act as near-term support. The broader structure remains positive as long as Friday's low at 25,492 is protected. Additionally, the daily RSI continues to trend upward above its reference line, indicating a positive bias. Meanwhile, Nifty futures extended gains for a third straight session, closing at 25,994, up 9 points. A marginal 0.2% rise in open interest suggests fresh long buildup. In contrast, Bank Nifty futures rose 105 points to 60,809, while open interest declined 0.2%, indicating short covering. FIIs remain buyers with inflow of 944 crore rupees in the cash market, taking cumulative net inflows to 5,913 crore rupees, while long-short ratio remained unchanged at 0.22. FIIs in derivatives are easing bearish hedge, reflecting defensive sentiment. Retail traders turned bullish, trimming shorts in index futures and calls while covering put positions. Proprietary desks also leaned positive, covering puts and adding long exposure in calls and futures. Volatility eased, with India VIX cooling 0.9% to 11.5, signaling stabilizing sentiment. Futures premiums narrowed down 10 points in Nifty and 14 points in Bank Nifty. PCR improved to 1.17 for Bank Nifty, while easing to 1.06 for Nifty. Rupee marginally strengthened by 2 paise to 90.70. Sectorally, Nifty Healthcare led with gains of 1.6%, while IT was weak, falling 1.8%. In F&O space, Eicher Motor gained 6.5%, while Bharat Heavy Electricals slipped 5.4%, topping losers. On commodities, spot gold traded volatile and closed at $5,085, up 1.2%, as stronger US payrolls data cooled expectations of aggressive Fed rate cuts. Spot silver advanced but trimmed gains to settle 4.30% higher at $84.25. Investors now await Friday's US CPI data for further direction. WTI crude oil climbed more than 1% as escalating US-Iran tensions ahead of renewed negotiations lifted supply concerns and supported risk sentiment. However, gains were partially capped after weekly data showed a sizable build in US crude inventories, highlighting demand-side worries. That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.